Almost ready. Almost ready. All right, that seems good enough. All right, good morning, everybody. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance for a very good reason. Because trading is risky and not appropriate for everyone, your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. I like to trade. I like to invest. I like to think about money. I like making money. I like investing money. I like a lot of things about money because money is a leverage for good things. Okay? Money is not the root of all evil. It's, right? Well, what did the Bible say? I forget who said it, but it wasn't money is the root of evil. It was the wanting of money. Now, I like money, but only because you can do wonderful good things with money. So if you're a good person, it's leverage on your goodness. Yeah. Very cool. So anyways, let's try to make some money. Now, how do we do that? Now, the first thing is you got to have a sustainable business, man. You have to have a sustainable business. That means you have to have a long-term goal, long-term vision, a way to develop the long-term vision using the right type of analysis. Because Forex is pretty straightforward. You just have to know absolutely everything in the world and then accurately predict the future every single day. That's it. Pretty straightforward. So to be able to do that at least at least reasonably, you're going to need good tools. You need a good process. And so that's what I'm here to share is a good process, the use of good tools, and how to build a business around this thing we call Forex. And sustainability is a fun way to say long term. Do you want to be trading Forex 25 years from now? Well, then a get-rich-quick scheme is not going to work for you. And in fact, if you want to get rich quick, this is the wrong channel. Go find some other YouTuber that leases a nice car, rents a nice house, and is still a child. Adults are different. So anyways, I like to build businesses. Before I was a Forex trader, I was a venture capitalist. Yeah, before I was a venture capitalist, I was a high-tech entrepreneur in the Silicon Valley. Before that, I worked in the nonprofit world and ran an organization of 3,000 people in the United States with 27 offices around the U.S. Sat on the board of directors, on our board of directors was George Soros and a whole bunch of other people. Cool. Before that, I was an astronaut at a little place called NASA. Yeah. All right, cool. Cool. Right on. Cool. All that means is, look, I look at Forex like it's a business. I'm taxed like it's a business. I do my accounting and my compliance like it's a business. You know what? It is a business. I get tax write-offs like it's a business. Okay? Yeah, it's a business, man. So, once again, How do businesses thrive? They have a business plan, and then they measure their ability to execute. Well, that's what we do, strategic and tactical Forex trading. So I bring all this to you, but ultimately I need to know how I can help. I can't do everything, be everything to everyone. So the squeaky wheel here is always going to get the grease. In my experience, the squeaky wheel also finds success more quickly. So please speak up. I'm not intimidating. It's not my fault I was born this beautiful. I know it's intimidating. I know it is. But let's get beyond that and let's roll up our sleeves and get to work, huh? Sound like a fair deal? Cool. So let's rotate over to the live screen and let's see how you guys feel about today. No, I can't do it yet. I need some more votes. Please fill out the anonymous poll. Salam, my good friend. Okay, and I will move around while you guys answer the poll. We can start with longer-term indices. Yen, still weak. I'm a seller of the yen. Yen has fallen for the last 12 hours. I want to buy yen pairs. That's how the wane do. It's been down? Great. I want to buy it. Okay, cool. Now we have US dollar peaking here. So maybe if it comes down, that would be a sign of risk on. Well, today Tesla reports, and Tesla is already down 43% from the high. Maybe I can buy it at a 618. Swissy, very weak, and then found some support recently. Isn't that neat? The technical analysis still seems to work, even though this is Swiss franc versus all the major pairs. Okay, Kiwi had stabilized. I see some weakness on the screen. I smell some blood on the Kiwi. Maybe we end up selling some Kiwi today. We'll see. Remember, these are daily charts. Okay, Pig had some strength and just collapsed. Good. That's kind of what I want to see. I have no disrespect for Great Britain, but as a trader, that makes sense to me, so I might be selling rips. Just want to mark that. Okay, a drop below this level would be technically important. Now, of course, it could climb, but I look at the fundamentals and I'm like, I'm not so sure I want it to climb. Although it can, it just will climb without me. Okay, Australia, riding the bottom of the channel, trying to hang on for dear life. Okay, but as long as China is in the dumps, I'm probably going to remain bearish. Now, the one remaining thing of that's giving a little bit of Aussie strength on the up days has to do with their central banking policy. They're not really in a place to raise or cut, so maybe they're stable. We'll see. Euro, okay, makes sense. It's climbing, okay, climbing. So we're caught between a rock and a hard place now. But the trend is up, my friend. Okay, the trend is up. The trend is up. The trend is up. Up, it's on the street. Kenny Loggins, I think, right? I was at a charity event and saw him sing that song about 12 times at the charity event. I'm like, oh, all right. It was good every time. All right. Yeah. What's up, man? What's up, man? CAD trying to recover, but I always have to step back and say, really? Yeah. All right. Well, in the small time frame, yep. Okay. On a much smaller time frame, it looks very bullish. So it is recovering here, but how much do I believe it? Well, it's happening. That's real. It's nice to have this type of analysis. This is just the short term, huh? So I guess we have to be asking ourselves, I guess it's not that level, it's this level. Huh? What do you think? Guten Morgen. All right, so, right? By the way, is the chat showing up on the live stream? I can't even see. Let me go check. I just want to see the live stream. Hang on. YouTube.com/Forex.Today. I just want to see what you see. Oh, yeah, I got those cool glasses on the thumbnail. I like those. Those turned out to be good glasses. Yeah, okay, yeah, it's there. Yeah, all right, cool. No, it's not. No, it is. Yeah, and it's got that other thing. Okay, I wonder if I can change the colors on that. The heat is on. I can change the colors. No, not really. Apparently, no. Oh, text color, yeah. Text color should be Trader's Way red, I guess, right? I can actually do that. I have to just move everything out of the way. All right. Were you really an astronaut? Well, I did work at NASA. I was Top Gun qualified by the U.S. Navy. And I did a lot of, I was an aviation research assistant because I was 20. Actually, I was younger than that, 19. So I was in the right program. And I did, in simulation, of course, I was a commander of the space shuttle, and I had a crew of 6 or 7 people, and we docked the space shuttle at the International Space Station, at the ISS. To be honest, I think we crashed it 7 times in a row and killed everybody. But on the 8th time, we docked it. Yeah. So to answer the question directly, yes. Yes, I did work for NASA, and yes, I was on the path to become an astronaut. Yeah. Yeah. And then things changed. That's that. Okay, let's take a look at the poll. Thank you for completing the poll. I appreciate that. So now the chat I adjusted the color of the chat to red, and now nothing shows up. Nice. Love it. Maybe I just have to move it forward or something. We'll see. Yeah. Yeah, things did change. I remember too very clearly. I was very dissatisfied with how things turned out, and I was actually on the BART going from Oakland, California, back to the South Bay. I still lived in the South Bay, so I was working at Moffett Field in Mountain View, California. I was doing testing in Oakland. I did a lot of medical testing, and I did a lot of written test, a lot of mathy stuff. So I realized it wasn't going to work. It wasn't going to happen. I remember being on BART. So then BART goes under the San Francisco Bay, and then it pops up in San Francisco. And by the time I got to San Francisco, which was about a 10-minute ride, I remember thinking to myself, well, I'll go back to being a businessman. And 2 years later, I could call George Soros a colleague, because we were both on the board of directors of a corporation. Cool. On the same corporation. And a whole bunch of others, right? But yeah, so I'm like, I guess I'll be a businessman. And that's how I got here. That's my little story. Oh, the chat is working now. It's just very delayed up there. I wonder if I can get rid of the delay. Okay, I'm going to put it back to the boxed, but I wonder chat delay, hide delay. I think I can speed it up a little bit. All right, so anyway, sorry. All right, so going back to this, I think we should look at smaller time frames now that you got your satellites aligned. Okay. G'day, Mickey. All right, so pound on the short run is trying to make a return. Wait, I'm all over the place here. This is daily, and that one is hourly. This should all be hourly. So you always got to make sure you have congruency. Yeah, there we go. So pound is trying to make a little comeback. I might sell that rally. Euro is strong. I might buy the dip. CAD has gone from weak to strong. Not sure. Definitely selling. So like when I met with the day trading group last night, I'm like, sell yen. Sell the yen or don't sell the yen. That's the mode that I am in. I don't know what you want to do, but that's me. So that's cool. So Aussie yen might work out. Pound yen might work out. Euro yen might work out. CAD yen might work out. Kiwi yen, not so sure, but maybe. Swissy yen, no, I don't think I'll do that. Dollar yen, yeah, I think we got some room. Okay, and that's how I think. Davey Pegler, yep. Oh, I'm out of coffee. All right, too bad. So that's how we do. That's how the Wayne do, right? So, right? I'm going to find reasons to buy a yen pair or not buy a yen pair. That's all. And you see how I isolate things? There's no market condition today that will make me sell a yen pair. Now, it doesn't mean it won't happen. It just means I can control my behavior. Okay, going back to Bitcoin, let's get back to Bitcoin. We had Bitcoin in an apex, and then it's wimped out, right? Okay, but that gets kind of interesting because it worked its way back into our zone. So we have, well, let's do this in blue. We had a zone in here, and we have I don't remember quite why. This one is mediocre. That's a mediocre zone. This zone up here is a little better, but we'll call that a double zone. Okay. All right. So we're kind of like in this, but if you're looking for a breakdown, this gets interesting because this becomes resistance, holding it down, but this already has been resistance. You see? So this can, if you're a bear, this gets kind of, this gets kind of interesting, you know. Could be. Only if you're a bear. That's all. Richard says USD yen at 155 could trigger a sell. Yeah, but I looked at the annual pivot points and it says 58. So maybe. So what do you guys think? Is this higher, high, higher, low, higher, high, higher, low, higher, high, higher, low, higher, high, 100% pullback, shields up, red alert. Okay. Lower high, higher low. Okay. High, higher low. Okay. Is this a breakdown pullback? Like what I'm trying to say is in my book, I call this plausibly. We don't know. Let me do yet another color. Let's do it in this greenish. Is this plausibly, possibly an old man easing into a hot bath? Or is it up forever? Well, that's the thing with some assets, right? This might just be up forever. But, okay, bullish. Let's go back to the black. Definitely bullish, definitely bullish, definitely bullish, definitely shields up, red alert. This is 100% pullback. That is a massive warning. Okay, slightly lower high. Okay, higher low, top-ish. So now this is a top. Triple top, but meanwhile, there's your breakout back to the initial support. Okay, if this develops into a higher low, this becomes bearish. You know, kind of bearish. Huh? Remember, bears tear it down. And you guys are 40% risk on everybody else, right? As risk on. So anyways, yeah. Okay. Okay. And this is literally in my book from 20 years ago. It's funny. I wish I had a copy. I don't have a copy of my book, which is funny. I can't afford it. They're $88 or something like. Holy smokes. Bum, 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 bum. All right, so let's move on to the next. Let's check the calendar for volatility events coming up. Okay, TRADARS, radars for traders, AI-generated technical trade plans. Log in. All right, so what I want to get to is the sonars. And tonight, I keep forgetting that email. Tonight at 9:30. All of this is off 1 hour. There's a glitch on the server. I thought it was on the site. It's not on the site. It's on the server. It's complicated because TRADARS isn't really a website. It's a database. And so I got to figure out where the hour is off. And I thought it was on the client side. It's not client side. So server side. So I got to get to the server team. And I keep forgetting to do it. But nonetheless, add an hour to everything. Okay, cool. So tonight at 9:30, okay, we have CPI coming out. That's an opportunity. Okay, tomorrow at 4 a.m. Eastern Time, German IFO. Now, you probably looked at their data. Did you see the data overnight? Services are okay, but they're in depression right now in their manufacturing industry, and they're in a manufacturing economy. But services are holding up quite well. So it would be really interesting. How does the business climate? Okay. More importantly, there are predictable patterns. Then tomorrow at 8:30, durable goods. Yeah. Okay, I don't really like durable goods. I think I talked about this somewhere on Sunday. Maybe it was the day trading group. I don't really like durable goods, but it produces a repeatable pattern. I much prefer GDP, okay? And that's way out to Thursday at 8:30. And TRADARS produces if it's less than, if it's greater than. That's what we want to look for. Okay, we want to look at assets that trade well. Euro dollar generally produces a scalp, a day trade, and a swing trade. But here, only a scalp and a day trade. Aussie dollar, scalp, spot, swing. But here, not. So maybe I'll just stick with euro dollar, right? And so here's my technical trade plan. For Thursday, remember when news was random? Remember that? News was random? So now I'm planning out Thursday, high volatility, event-driven strategy based on the analysis of at least 12 of these GDPs, broken down by less than expected or greater than expected. 80% chance up if the actual is less than expected. Euro dollar goes up. 71.4% chance there'll be a scalp down if it's greater. And I'm like, so I think it's going to come in hot. So let's take a look. And in January, okay, the market moved sideways, then went down on the news. Okay, market was kind of going a little bit of sideways. It went up for a half an hour, then down, closed lower. This started dropping early and closed lower. This one went up for about a half an hour to 45 minutes and then closed lower. This one, the news came out. Even though it was an uptrend, news came out, closed lower. So this is the type of thing we're looking at. So yeah, maybe, Maybe. And I think we are sensitive to growth right now. And then PCE comes out on Friday, but Sonars, right? Sonars just doesn't see a pattern. So you'll get volatility, but without a pattern. You know what I'm talking about? So kind of interesting. So we can put that on the list. So today is Tuesday, the 23rd of April. Coming up on today's calendar, the Red Book. Yeah, this used to be quite popular. It's a survey of retail. Used to be quite popular. It's sort of like, nobody uses it, but I bet you it's useful. In particular, if you're trying to figure out consumer confidence and consumer confidence and, well, retail sales, for example, and maybe GDP. So the Johnson Red Book Index measures growth in the U.S. retail sales. See what I'm talking about? The index is based on the sales data of 9,000 general merchandise retailers. Okay? Representing over 80% of the equivalent official retail sales series. So it's not governmental. So if you don't trust the government, use this one. Or if you're going to front run retail sales, you get your data from the Red Book. Shh, don't tell anybody. Okay, we got PMI coming out, and we want to compare that to, so like Europe, manufacturing is in recession. In the UK, manufacturing is in recession. Specifically, Germany, manufacturing is in recession. Now, I think the UK has all right services. I think Germany has okay services, but one of them, maybe it was Australia. It was one of the economies that basically was two shakes of a lamb's tail of recession, even on services. So we're going to do some comparative analysis on this, or you should. It's super easy if you have QuantBox. If you don't have QuantBox, it's going to take you a lot of time and effort, which means you're not going to do it, and that's lame. So to avoid being lame, you should sign up for QuantBox. New home sales is important. Particularly, you might want to watch the relative change in mortgage rates. And I looked at that yesterday, and we even broke it down by credit. And what we discovered was if you're a normal person, you do what you can to survive, and you never get beyond that. If somehow, some way, maybe through trading Forex, you can just do a little bit better. I showed you how you can make millions of dollars more by doing a little bit better. Knowing when to buy a home and when not to, but also how to get ahead, how to pay less taxes, how to benefit from compound growth, how to use the United States tax structure, like through corporation, and then be able to set up pension funds for yourself so you can pay yourself first before you pay the government, and then compound that over decades. And so you just get basically a regular person versus you, an extraordinary person, and the difference is millions. But maybe income isn't radically different. Neighborhood isn't radically different. It's just knowing how to structure yourself as a business and how to be an economist and a trader and an investor and carry that out beyond just Forex and trading oil and gold, but even into the real estate market. Cool. So anyways, that was yesterday. Okay. Richmond Fed. Okay. You think they're being negatively affected by the port closure near them? Yeah. So we got also auctions this week, and I mentioned this yesterday. There's a lot of 2-year, and there's something else like 10-year, 2-year, 10 years, and 30 years or something. But some of these bond auctions by the U.S. Treasury is the largest in history. Yeah. Okay, lots of Aussie news tonight as well. Aussie and Kiwi news. So if you're trading Aussie and Kiwi today, right? Remember, QuantBox says it's likely to move well. So if you're going to trade Aussie on the Aussie news, there isn't a good trade on Aussie dollar. There's maybe a mediocre trade, and I mean not like the move, but I mean the predictability. So to be able to predict direction is really, look at this, even long and short, depending on the time frame. Ugly. Nothing good here unless it does actually come out less than expected. But even then, they're day trades, right? They're day trades. So 100% chance of down. But look how zoomed out. These are swing trades, actually, aren't they? These are swing trades. Oh, my God. So they produce. Notice there's a scalp, take profit. I love scalping and taking profit on Aussie. This one went up and then down. So, well, you got to be a little smart. You got to be prepared. You got to know where your resistance lines are. This one dropped and then came all the way back. But, still closed lower. But, again, the scalp was the better trade. It's just not predictable because this one went up and then went down. So, actually, this one was a good scalp. So the way I would break this down if I were me, I'd say if there is a negative differential according to the past performance, if I were going to predict my behavior, I would either get this short-term scalp and be out in the first 20 minutes, but if it pops, I walk because it's not even going to come down until London. So there's no need for me to scalp. So I either get a very quick scalp on a 5-minute chart, and then I take profit because, scalp out in 15 minutes. Scalp out in 15 minutes. This popped. This one scalp, hung around and then dropped. That kind of thing. And not sell a pullback. If it goes higher than the pre-candle, then I probably take a walk. Neato. Let's move to the next commodity. You're probably watching oil come down. Great. Notice pivot to pivot. Not random. Look at this. I even have it here. Profit target for today. Profit target conservative. Look it. All right. So we're off by a penny. Sorry. Okay. Whatever. But on top of that, there's a bigger pivot, right? So let's back out a little bit. Just a little bit. Okay. Up to target. Okay. Top, lower low, lower high, lower low, massive rally, massive collapse. Now what? If I'm going to use these moving averages, and I think I shall, not up. Now, I'm a bull, so if not up is my analysis, okay, then I wait. Okay, you can't be everything, so you're either a bull or a bear. Gold coming down, and I was showing on QuantBox. I'm actually working on an idea here. Do I still have it? I do. So here's QuantBox, and I'm working on an idea, and I hope it works out. It's not working out now, but that's reality versus expectation. Maybe gold is doing something strange. But here's what I'm doing. I'm looking at the 2-year treasury. That's the yield on the 2-year. Cool, right? And then I'm looking at an average of the 2-year yield. So I'm trying to get a smoother line. So instead of right? Instead of something like that, you just say, okay, well, what's going on in the treasury market? And, it's somewhere between a week and 2 weeks, that kind of stuff. So we're smoothing it. And what I'm interested in observing, I'm in observation period, is see, the thing is, I know in this period, and, if you go back in the data set, you can see that it would have been like this, right? I know in this period, gold went bullish. And generally speaking, now there's always dips, but generally speaking, this went from $2,000 to $2,400. It went up $400 in this period. And then I noticed, well, that's when the 2-year yield was higher than the average. It's just above average in yield. And as Richard points out, that would be unusually high expectations of inflation. We're not measuring inflation, we're measuring inflation expectations. So people think and are acting as if inflation is higher than normal, whatever that means. So, this could be an accumulation phase. Fundamentally, we don't know about the chart. This isn't the price chart. But I do expect this was a dip. Then there may be another couple of days of accumulation. Once again, your chart might be looking like this. So don't take this as a sell signal, because you would still have a higher low. The thing is, sort of in here might be this spot, and you accumulate. And then it cools off as we get near this, and then it's on again. And since the end of March has remained bullish. And I'm wondering, relative to its average. And now we're losing this. So it's almost like a MACD, right? So gold has been falling, and this has been flat. I wonder if there's still a relationship, because if this green stays above the red, and it's getting closer to the red, right? Because yields have been near 5% now for about a week. But if suddenly we get a different change, wowzer. Now, in analyzing gold, I think one thing that's happening, and this is the market thinking ahead. We hit 5.0 on the 2-year, and we did that late last week, remember? The 2-year hit 5. Well, if there's an assumption that we cannot have 2-year yields above 5, then the market is assuming already the crossover, and therefore the drop in gold. So I'm analyzing like it makes sense. In hindsight, it makes sense. Okay? But we'll see if it becomes a useful tool. Does anyone have an opinion on this? Okay. If the 2-year rises, that means investors expect the rate to be equal, blah, 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 blah. Okay. And then I drop down. If the yield in green crosses above the 8-day moving average in red, inflation is high and could be hedged by buying gold or vice versa. What do you think? It might be interesting. It might be useful, don't you think? I'm thinking maybe I expand this out and give it a little more space. But I don't want to backfit it too much. No opinions? Nobody has an opinion on this? We have cross currents today, slightly bullish versus slightly bearish. Okay, so be careful today. Time will do. Okay. Well, the thing is, Richard, if inflation stays persistent, and I don't know if we can get the 2-year above 5%. It sounds difficult, but who knows if we have a massive sell-off this week because of earnings, like there's a good chance Tesla is terrible. Well, if the economy is slowing and we have inflation, there's all kinds of stuff going on. You could maybe theoretically believe gold is going to go up. Well, if you maybe theoretically believe it's going to go up, whatever you used in your measure, okay, right? you could, let's drop into an hourly. Ooh, I lost my 55. All right. Well, I can see it with my mind. But what if you did something like this? You said, well, gold dropped like a ton of bricks. Uh-huh. Okay, great. Bottom, double bottom, higher high, higher low. Could you buy this if you were a bull? Yep. And the next day, could you buy this? Yep. So you got a double bottom, higher high, higher low. That's a buy if you're a bull. Higher high, higher low. That's a buy if you're a bull. So you just set it up. Okay? This is your job. You sit and you wait. Okay? What do you do for a living? I'm an ambusher. I ambush for a living. And I try to set it up where I'm wrong, I don't lose money, and if I'm right, I make money. But I have to be patient. Well, Richard says, well, you have to wait until PCE. That's true, but you could analyze what goes into PCE, look at the trend, look at the correlations, look at some of the input data, and decide now PCE is up, let's say. I don't know what you would decide, but let's say I say PC up. Okay, if PCE is up, what would I assume gold will do? Okay. Go up. Then what the hell am I doing now sitting here, right? Waiting for selling it. Well, I might be picking up some pennies in front of a steamroller, or maybe I'm eating, sweeping up crumbs. Maybe I'm shooting at rabbits, or maybe this is a massive drop. I don't know. But look, what I'm trying to say is, if I thought PCE was going to be red hot relative to what everyone hopes, and that would make gold go up as a consequence, why would I wait for after the fact? My job is to buy dips. Okay, so here I am. Is this a dip? Here I am. Rock you like a hurricane, right? All right, so we have a 50% pullback. So wouldn't my job be like sit around on a 15 or a 1H and say, well, it might go up today. I don't know. Okay, but I know this. Okay, if it gives me a short-term reversal pattern, I have the opportunity to take it. What does that look like? How about like that? Well, what if it falls? Well, I'll probably lose some money or break even. That's the game. You just don't want to do something stupid and just bleed out in a foxhole. So, is it worth? Is that a good tactic? Does it follow the rules of engagement, or is it just negligently dangerous? Well, okay, if you do something like this, put your stop here, okay, and it does that, right? Or you skip the first one, and if it does the first one and makes a new higher high, then you catch the next one. Meanwhile, you're still in before PCE. The idea is by the time you get to PCE, you already have your stop jammed at break even, and not with Like, don't do something like, oh my God, I have 18 pips profit. I am so happy. Okay? Move my stop to break even. What? Well, I might lose my 18 pips. You got to think bigger, son. Okay? You're trading like you're a frog in a well. You see the sky. It's small. You know what? No, my friend. The sky is big. Okay? So you back out and you say, well, where am I? And you see the whole sky and you're like, oh my God, this is a 50% pullback. So if gold is going up on PCE and I catch it here, then my target is 1382. See, if 50% predicts 1382, we have a pivot point right there. The annual R3, so 2,500. And there's a high probability that that's the high of the year. Oops. Did you know that? So that's what I would do if I were me. Okay. So I could adjust this one. This is me doing something else. I'll adjust that one because it seems too much, right? Yeah, and let me adjust this. So what I want you to do is research and have an opinion for gold and back it up. And then let's say you were a bear, but gold has an update. It doesn't impact you in the slightest. I need you to be a boss, not a liquidity event. Okay? I need you to know what you stand for. Are you a bull or a bear? Okay? You have to be able to answer that if you're going to survive this gig. Okay? What do you think? Is there reasonable possibility? Does this fit your fundamental goals? Does this, I know this isn't the greatest technicals. I look at this and it's not a great price. 2,300 maybe, but that doesn't seem incredibly important. The 50% is, but it's not really a pivot and there's no real pivots, although these are annual pivots. So maybe I adjust my pivots and see, are there overlaps there? So I go to indicators, basic pivots, and we'll do it to the month now. Let's see, is there any logic here? And M3, R1, we're using now R1 as support. Maybe that's what's going on. It's a 50% and monthly R1 after topping out. Okay. And this gets us to monthly R3 as well as annual R3. So this 2,500 is quite important. So I'd overlap both of these targets. And now I'm golden. I either do this or I don't do that. Well, now what does that mean? What does that even mean, do this? That's the strategy. So now I can go on a 15-minute chart. And what I do is I buy higher lows. Is this a higher low? No. Well, let's set it up. Okay. Now, Richard says, but well, if we have higher, okay, look, I don't know the future. Don't start like trying to figure out all the nuances. Okay? What you have to figure out is what you intend to do. Okay? Don't try to figure out the market, what the market's going to do, how the market's going to react. Okay? The market can go up, down, or sideways, right? With incredible volatility either way, Richard. So you pick one of the options, up, down, or sideways. So I'm saying up, but there's at least a 66% chance I'm wrong. Okay, great. How do I filter that? I don't buy because of the news. I buy if the market reacts in such a way it gives me a higher high and higher low. And if it does that, I'm long. Because I'm trying to take out 2/3 of the possible price action. I don't want sideways and I don't want down. So I wait and I observe and then I pull the trigger. If I get permission through my rules of engagement. Most of what Forex is waiting, observing and waiting. Observing and waiting. Observing and waiting. Observing and waiting. And if you get the market conditions to be favorable, you trade. Right? Now, Gregory says, yeah, it looks like it might be a buying opportunity. It could be. The thing is, I don't know. You don't know, but you've analyzed it and say, well, you think it is based on your analysis. Yeah, I pointed out a few reasons. Sure. Doesn't mean mine is any better. The thing is, you got to get to the point where you've decided, I'm interested in buying. Okay, great. Now you wait and observe, and then if you get a higher high, higher low, and that's what I'm doing here, okay? If you get a high higher than this, okay, and it pops up, do you buy high? No, I buy low. So you get this. Okay? This is simply confirmation of direction. And the pink line is your area of opportunity. And very often you'll see it's a fib, it's a pivot point. By then, everybody's on the clue train. By then, the moving average will come around. So like, for example, this moving average here will roll over and catch up there. It's all good, man. It's all good. But the thing is, if you don't know, if you're chasing your tail like a dog, you'll never be ready for this. You're always going to be late. Because you're going in circles. Let me tell you about heartache and the loss of God. Wandering in hopeless night. Wandering and wandering. Okay? In hopeless night. Around and around and around like a dog chasing his tail. I'm a bull, I'm a bear, I'm a bull, I'm a bear, I'm a bull, I'm a bear, I'm a bull, I'm a bear. I'm a bullet bear. Right? That turned into Justin Timberlake. So, the way to really increase your success is break the cycle. Be one, and if you're wrong, gold just keeps falling another $150. You're like, what about that? You're not on it because you're not a bear. You're not in it because it didn't turn bullish. So if you just use simple and reliable technical analysis, you will be fine if you have a strategic plan. Now, like with TRADARS, here's how I think you're just going to, massively increase your success. Okay? Let's go with this. Let's combine this. Okay? Let's say you are a bull. You've decided it for this reason. Okay? You think this is a buy zone. Good. Also, you analyze QuantBox, and your analysis of QuantBox says, you're a bull. Maybe it's that 2-year yield I showed you being above average. Who knows? But the thing is, you get to a conclusion. You're a bull. Okay? And I've always traded this way where I've made my decision before I even look at a chart. And now let's say I go to radars. Say I'm already a bull. And then I say, hey, let's look at the commodity radar. And then let me filter this a little bit. I only want to see gold. So Brent, no. WTI, no. Silver, no. Just show me gold. And what do I want to see if I'm fundamentally a bull? I want to see bullish trade plans. 9 hours ago, okay, right? 9 hours ago, TRADARS saw a bearish move. Do I want it? No. Now, it's looking at the 15-minute, the 1 hour, actually 15-minute, 30-minute, 1 hour, 4 hour daily. So it sees scalp, spots, swings, and trade and position trades, right? So I could sit here now and I wait. I don't even have to use the chart anymore. Think about that. I don't even need to look at a gold chart anymore. TRADARS is watching it on multiple time frames, looking at over a dozen patterns. If this turns bullish, it will tell me. I need to make the big boy decision. Am I a bull or a bear? So right now, it's like it's setting up. It's telling me gold on the larger time frame, on the 4 hours coming down. Sweet. Oh my God, that's exactly what I want to see. Because if I was doing my own technical analysis, if I didn't have an assistant like this one, see, TRADARS is simply my assistant. I'm still the boss, right? So I go delete, and let me put a white marker here, and I see like, where did it go? Oh, I see, it's not on marker. Okay, this area, and let me put this on line. Okay, this area here, look, delete, if I can do it, okay. This area here looks like it might be interesting. So where's that? That's 200. Now, TRADARS says down to 23. So I could say, okay, 23 or 22 might be interesting, right? 23 or 22 might be interesting. So when price, if not when price, drops to 22 or 23, so we're at 23, I should be RWA, ready, willing, and able. You have permission to engage bullishly at this first price if TRADARS on any time frame throws you a bullish setup, because it's looking for patterns and patterns and patterns and patterns and patterns. So presumably it'll throw out a 15 before it'll throw out a 4 hour, right? But as soon as you see that 15, what's just happened? The AI, which has no bias whatsoever, has now confirmed it has seen, and it's never wrong. Okay? Because it's a computer. If it's been programmed to see 4 touches of price, it will only throw out the signal if it's seen 4 touches of price. Like, it will never get this wrong. It sees head and shoulders patterns beautifully. It's seen them 1,000 times, more than 1,000 times. And watches the market before and after. Like, it's never wrong. We don't know what the future is going to be, but a bullish pattern, if TRADARS throws down a bullish pattern, it happened. So the thing is, are you pre-programmed to buy the dip? Well, if you're just walking around chasing your tail, it's never going to help. Okay? Cool, but you see how you use in conjunction? So now I'm sitting here, and if I don't even want to watch my chart, I can let it wait. Higher high, higher low. And you know, if that happens, you get something over here. And now the only thing that will pop up, so I could just leave it like this now. Okay, I can just leave my screen like this. This is only watching gold right now. And I can just sit here waiting. I don't have correlation statistics, Ravi. But they both have dropped recently. Like, let me answer that quantitatively. It's not correlation, though. But this you might find this helpful. Okay, you might find this helpful, Ravi. So I go into QuantBox. This is where I do my economic research. Okay, I'll log into the database. Remember, it's a database, not a website. And we can do our economic research, okay? So Ravi is like correlation between gold and silver. Okay, I covered that this morning, hours and hours and hours ago, but I can show you how to do it yourself. For example, we can go to a swing trade heat map, which is what the markets have done over the last 7 days. And it's updated all the time. So let me zoom in so you can see it a little better. Okay, gold and silver. So far this week, gold is down 2.7%. Silver is down 4.2%. So this is only over the last 7 days, but there's two things you could, at least not based on this limited data set, conclude. One, they are correlated. Gold is way down, silver is way down. Two, the beta is silver is double than gold. So there's twice the volatility. If this is true, remember, it's a very small data set. But in this data set of 7 days of price action, silver has twice the beta. Okay? And a positive correlation. Yeah, JP, yeah, sitting there waiting is probably not the right way of saying it, but you should be watching it. I mean, you know, as you go through all your other trades, you might have multiple things you've done the same thing to. All right, so you're like, okay, I'm interested in buying gold today. Are you interested in buying stocks? I don't know. I might be interested in buying dollar. So you're like, okay, I might be into dollar. So I'm going to kill this, kill this, kill this, keep that, kill this, kill this, kill this, kill this, kill this, kill this, keep that, kill this, kill this, keep that, keep that, keep that, keep that, keep that, keep that, keep that. Cool. And now you're looking for situations of maybe buying dollar. This says sell dollar, pass, sell dollar, pass, sell dollar, pass. Hang on, I'm zoomed in. A little better. Sell dollar, pass, sell dollar, pass. Buy dollar. Ooh, okay. ABCD Fibonacci pattern identified this morning, about an hour ago. This pattern is still in the process of forming, possible bearish price movement. So this is a maybe. It's rising for maybe a sell later. Okay, that's a maybe. Sell dollar, pass, sell dollar, pass, sell dollar, pass, sell dollar, pass, sell dollar. Yeah, so I got nothing to do right now. Okay. And then, so now I can go back to gold. Okay. Now, okay. Insomniac says, hey, if you go to active, okay, these are trades that are already in play. And this is coming down to my next level, which is 42. Okay. So it's basing this day trade of a 71% chance it comes down to this level. Yeah, that makes sense, Jim. I move around, but if you move around, it doesn't matter, right? So I already concluded based on my personal analysis. Remember, TRADARS is just your technical analyst. It's an assistant. Okay? I've already concluded that somewhere down there I might be interested in. So I remember I'm RWA in these periods, ready, willing, and able. If it turns up, I'm going to take a shot. If it drops lower and then turns up, I'm going to take a shot. Okay, now this is already in play because the plan was to break 24.31 and sell. Okay, this happened on the 22nd. What day is it today? What's the date today? Anybody? 23rd. So this was in play as of yesterday. Okay, yeah. This was in play since yesterday. So it started out in the radar group. Okay, radar is looking out into the future, looking for potential opportunities and threats. But they're in play. Okay, possible bearish price movement forecast. It's a maybe. It might happen. Okay. The level is 23.14. The target is 22.90. Okay? But then if it breaks this level of 20, because it's a channel up breakout. So if you get the breakout of the channel, it goes to active. And then it's saying move your stop to break even and then manage the trade out to 22.28, not 90, 22.28, but maybe as low as almost 21. You see? So I'll try to highlight that. I have to get a highlighter to do that, to make it transparent. Okay? You see? You can see the logic of why it's picking that. I guess I can just make this thicker. Okay, you see the logic, don't you? Down to the congestion zone. All right, cool. Well, I might have to wait for my trade for a while, right? So it's showing bearish, but it doesn't mean you're a bear. I might be okay. I might be doing something like this. In fact, that's what I just set up to about 2,500. And what happens there? Annual R3. It would be my projected extreme high for the year. If we make it to YR3, I take my money and I run. Cool, right? Okay. Now Andrew says China bought 225 tons of gold. Okay. Yeah. Last month, 5 tons. So what are they doing? I guess I'll make that a different color. Assets, liabilities. You know what? Let me just redraw all that. Okay. Okay, cool. So, Andrew says they bought People's Bank of China bought 5 tons of gold. Okay, so, so on there as an asset now they have gold, right? Cool. What did they use to purchase gold? What was their offer? Andrew's wondering if China's doing this because they want to be a reserve currency. Well, let's talk about it. What did they offer for gold when they bought gold? They increased their gold on the balance sheet. They traded bonds for gold. How many gold dealers well, more specifically, cash, Jean-Guy. Not yen or dollar, cash. Yes, their cash. Okay, so cash went down. Gold went up. Now, so let's say 5 tons was $5 billion. Okay, whatever. Doesn't matter. Okay, so the amount of gold in price went up by $5 billion. The amount of cash went down $5 billion. So Andrew wants to know, are they doing this to become a reserve currency? Well, what changed, Andrew? What makes them better than before, assuming that somehow being better will help them become a reserve currency? Okay, they have the same amount of bank deposits, which are liabilities because they're on demand. They're a liability because a bank can come up and say, give me some of my deposits. Okay. So they're a liability, but bank deposits go on this side too, right? And they convert bank deposits into things like gold. Cool. But this is a fairly liquid asset, so they could sell $5 billion in gold, get $5 billion in cash, and pay off deposits, you see? So please answer the question. There's 74 people. Nobody's got fingers today? When you've been eating peanut butter out of the jar with your fingers? What's changed? How would this make you a quote-unquote a reserve currency? Take a guess. Or try to figure out what's going on here, if that's not the answer. Okay. It's not necessarily weaker. Where did the cash go? Andrew's like, are they hedging and letting... What? Central banks don't hedge. They have unlimited money, Andrew. So, Jean-Guy's on the right path. Why did cash weaken? It's not the strategy, but it's a result. Well, okay, price, quantity, okay, demand, okay, and you have supply 1, okay, and an equilibrium price at that quantity. So then 2, they come in, they buy gold from gold sellers, and they paid them cash. So the cash now went into the economy, and the supply of cash in the market increased from quantity 1. Well, we'll make this Q2. We'll make this 1. And we'll make this quantity 3. So quantity went from 2 to 3. The quantity of money in the economy went up. But what was the net effect? And as Jean-Guy correctly points out, price went from P1 to P2. Oops, P2. Price went down, quantity went up. But what happens when the quantity of money in an economy goes up? Well, that's a result. But they don't have any inflation. You guys are thinking, you're not thinking China. China doesn't have any inflation. But what causes inflation? You're talking symptoms now. No, what happens? Hey, Ravi, would you like a whole bunch of free money? What would you do, Ravi, if I gave you $1 million right now? Is your sort of acumen going to expand, or are you going to contract? You're going to throw it all into a no interest bank account and sit on it? No, you're going to spend more. You're going to invest more. You're going to do stuff. Hey, let's do this. Let's do that. I want to buy some Bitcoin. I want to get some Tesla. It's 40% off. I want to buy some Tesla. I need a bigger house. I need a faster car. I need a golder. My gold watch isn't gold enough. Now, you can do says too much money supply. You know the money supply of China? What do you care if you have negative inflation and negative growth? Okay? So you guys are thinking too out there. Just, dude, they're putting free money into the economy. Money that didn't exist. It's designed to stabilize the negative spiral of disinflation. The economy is not doing well. And then Jean-Guy goes to the next step. So in this case, we go back. Andrew is like, are they buying gold so they can become a reserve currency? No, nothing's changed. Except there's more money in the money supply. Therefore, it's to stabilize a falling economy. But there's also another reason for it. Okay? We get all of this. La 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 la. Delete, 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 delete. Now, in economics, you end up having to do this, in particular in grad school, and this is the stuff grad students hate. And so now you go, what's the sign for yuan? I don't even know. Or RMB? I don't know. And then you do like US dollar, for example. And then you have to do these same demand and supply charts. And then you have to like bring them across and you do comparative analysis. And oh my God, I hated doing this crap. But here's the thing. Jean-Guy already pointed it out. If the money supply of RMB goes up, okay, the price of RMB goes down, it creates economic expansion, but right? Okay, great. The price goes down. But down in what? What does that mean? Priced in dollars. So if dollar is USD bar, dollar bar, which means it's fixed. So dollars remains the same, but the price of this goes down. Then the dollar buys more Chinese stuff because the Chinese stuff is priced in RMB, and now the value of RMB is falling. So everything in China gets cheaper to an American. And then you do it to euro and all that kind of stuff. So that also supports economic activity through export competitiveness versus Japan. What's Japan doing to their yen? Okay. They're buying unlimited bonds. They're buying an unlimited amount of JGB. They could buy a quadrillion JGBs, increasing the balance sheet of JGBs on the balance sheet of the Bank of Japan, but also they pay for it in yen. So the money supply increases. The amount of yen in the world increases, so the price of yen falls. When the amount of yen goes up, so the number of yen, the quantity of yen goes up, quantity of RMB goes up, the value goes down, and guess what? They're competition. So going back to the initial question that Andrew poses, are they doing this to become a reserve currency? Oh my God. They don't, that's such an esoteric kind of thing, like, gee, one day I'd like to be a reserve currency. Well, right now you are drowning. Okay? The economy in China is drowning. So, Andrew, when you're in a swimming pool and you've been treading water for an hour and now the water is 1 inch above your nose, what is it that you're thinking about? Well, maybe later today I'll go have a steak dinner, and tomorrow I have a dentist appointment. Can't worry about that. And oh yeah, this weekend that should be really good. I hope we have really good weather this weekend. I'd like to maybe do some horseback riding. Or are you focused on the fact that if you inhale right now, you're going to choke and go to the bottom of the pool? What is your priority in that situation? Long term? You're thinking about your weight, thinking about your lifestyle, thinking about, right, a new outfit. Maybe you should buy a new outfit. No. Your primary focus is what you're going to do in the next 5 seconds. Right? And so this long-term esoteric, one day I'd like to be a reserve currency, is not the focus. But they are buying gold to increase the money supply, to maintain a balance sheet, but to spur the economy, lower the value of the RMB, and hopefully increase export orders. Oh. Yeah, it's nice stuff, isn't it? But you remember, and I pick on stuff like this in particular, like when people are making comments too, because my fear is you guys go off after my live streams, you go off out into the world and you're reading your Twitter feeds and your blog posts and your Reddit posts. And there's so much bullshit in this world that if you put any level of scrutiny to about 90% of it, you realize it's just crap. Do you know what China needs to be a reserve currency? How about a deep and liquid bond market? How about a reliable legal system? That's the institutions. An independent central bank. A stable government. Well, they got that. A reliable legal system. I think I said that, right? A deep and liquid bond market. Free floating currency. Like, dude, their currency doesn't even float freely. Oh, well, the onshore and the offshore. Like, dude, that's all nonsense, right? They're 50 years away from that status. So if you're reading some guy on Twitter that's got 7 threads on why China is going to be a reserve currency next year and the dollar's about to collapse. Bullshit. Yeah. Do the analysis first. And all of a sudden you're like, oh, that's right. They're stabilizing their economy and trying to support exports. Yeah, that makes so much more sense, but it's boring. This is what central banks do. Okay? And what do you think would happen if suddenly China was hit with high inflation? Sell the gold, remove the money, and the balance sheet's balanced. The value of the currency goes up, and inflation comes down because they reduce the quantity of money by shifting the supply curve from the right to the left, reducing quantity and raising price, which lowers inflation and slows expansion. It's just what central banks do all the time. This is like taking out the trash once a week to the curb.